What's up, little midgets? Welcome back to another video. Today's going to be a weekly recap for NQ, SPX, and DXY, and possibly QQQ. I haven't done too much on QQQ. So let's talk about it. NQ and SPX all had their all-time highs on Friday, which was a very big deal, especially for the S&P 500, as it had not done the all-time highs in 500 something days, or maybe I'm getting that wrong. That's just what I heard. So it's a big deal. It's a very, very big deal. And that means the market right now is in a very bullish state of mind. It's not really looking to be bearish at all. And so far it is just showing complete bullish price action. Now, you got to know something before we start this weekly outlook. I trade ICT, and I trade his concepts. I trade his 2022 model, and that's what I'm going to be going over. Now, what I do is I look for this model to be formed during live markets, but it can also be formed, for example, right now. And we can anticipate this model being formed because the criteria of it is all it is a high time frame PD array or liquidity grab, daily high, weekly high, monthly high, anything like that, for price to reverse in the opposite direction or, change structure. So a market structure shift, so it shifts the structure of the market to go either from bullish to bearish or vice versa, bearish to bullish. In this example, for example, we're going from bullish to bearish, hopefully. That's what we're looking for. Am I saying that's going to happen? Absolutely not. Is that what I want to happen? Sure, because I'm looking to go short. And the reason for that is there's a couple reasons. Where did my text go? I swear I had it. It might be on the daily. Okay, it's on the daily. Fuck. Anyways, we'll look at the daily. So I've drawn out a nice little diagram here in a few things to read off. I said weekly outlook for NQ, NQ all-time highs, waiting for the standard deviation reaction. This standard deviation was marked on the daily, just mark here on the daily, off this monthly PD array, which is a very big confluence. As you can see, we had a very nice run up. Through this run up, we created a swing low. That swing low reacts off the swing high right here. As you can see, the swing high is very nicely created in this range. We take it out, we close fully above it. That is a perfect market structure shift in my opinion. That's a daily market structure shift. Usually when you see a market structure like this, you want to see a retracement back. So this is a sell model, and that's what we're expecting here. But you want to see a retracement back into the displacement. So with this displaced, you want to see a retracement. So I'm going to just draw it out for you real quick. It displaced, what you want to see is some kind of retracement. Did we get any kind of retracement? Nothing at all. And usually to count it as fully retraced, so you might say this is retracement, it's not, because this barely went, we need retracement to go below consequent encroachment, or the equilibrium of that displacement range. So from swing low to that range, to the swing high of that range, that creates the premium and discount range. We want price to come down to the discount. In this example, as you can see on the daily, we didn't get that at all. Now, what's interesting is on NQ, we did the standard deviation for this, market structure shift. And as you can see, standard deviation was correct about all these levels. So far, if you were to enter on this trade, which you couldn't because the model just doesn't allow you here, there's no retracement, you would have targeted negative 2.5. If you could see European profit, it hits. Now, what's interesting is a negative 3 negative 3 has been hit on NQ. Negative 3.5, not quite there. And negative 4, also not quite there. But we're getting there. What's interesting is on SPX, as we'll check it out in a minute, the negative 4 is like about to get hit. It's right there. So a lot of people are saying that, all-time highs could be reaching even higher. And I'll tell you right now, and this is why I mentioned earlier that I trade ICT. ICT released a post saying that he doesn't trade, or he doesn't know. No one knows what's going to happen when price hits at all-time highs. It's called this price discovery. I don't know the full term, but I know it's something with price discovery. And what that means is price, and I know I'm saying price a lot, but price is going to go and pass the previous all-time highs, and now that current price that it's trading at will be the new all-time highs. And that's a big deal. That is a very big deal. That means that wherever that price goes, it can go up to, infinite, for example. Anyone can drive it up. But that's a big deal in the market. Very, very big deal on investors. It's a big deal on people that held long terms and they're looking to sell at one point, right? Maybe some panic sellers are selling. So it's a big deal. It's a very big deal. And when we make new prices like this, you don't want to be involved in retail trading that. You leave it up to the hedge funds, you leave it up to the banks to deal with that kind of losses or gains on their profits. And you leave it off to them to manipulate price to wherever it wants to go. And then you wait. This is a waiting game. You wait until price comes back to an area that you know how to trade it. For example, if price comes down under this previous all-time highs, I would be looking to trade. Why? Because we have order blocks, breaker blocks, fair value gaps. We have some kind of confluences. Here, anything above here, we have nothing. We have nothing over here. There's nothing to base it off. So we don't know when it's going to reverse, right? We can maybe use it as support here, fair value gaps, but if it doesn't come back down to this, you can't trade it. So it would be smart, and I'm saying this as a beginner, it would be smart for you guys not to trade during this week unless, like I said, price comes down below previous all-time highs that it just broke. If it keeps going up and up and up and up, it's only a matter of time until your call options are going to expire out because it's going to reverse on you. It's only a matter of time. It cannot just infinitely go up. That will not happen. So, and again, we don't know how high and how long this can last. Standard deviation, you can drop all the way up to 100. But you have to understand that it's psychology. It's once something goes up, it needs to come down. And especially when it hits all-time highs, it's going to come down. Is it going to come down a fuck ton? Maybe not. Is it going to come down a little bit? I don't know. I'm not I don't know. I can't tell the future. Okay? But I said, if and when price comes back down, I'm expecting a daily / weekly bearish market structure shift to the downside. Now, what does that mean? That means that here, and this is the model, the sell side. I'm going to talk about this in a few minutes. The model is currently forming. As you can see, we're on the daily. I'll move up to the weekly to see this, but you can notice that there's a little uptrend, tiny uptrend right here. Boom, 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 boom. This is the most recent swing low, or the higher low, my bad, higher low that gets created here. Why is it a higher low and this is not a higher low? Because that's not a swing low. This is a swing low and it's the highest from this one. Okay, and this is external swing low. That creates the range. Now from this, notice that if we create, hypothetically, we create I want to do like something like this, right? So let's draw this, let me make it thicker. Let's say we create another candle like that, okay? That means that right there, that price, this high is lower than this high, and this high is lower than this high. So that creates a swing high. And so from this swing low to that swing high, that creates a range in itself. Now, what's even better is, and I'll talk about this, see this rating on liquidity before it hits some kind of PD array? This is good. We want this rate on liquidity. Guess what happened? We got it right here. We have a rate on liquidity, which means that it not only swept out sell stops, people that were shorting and had their stop loss here. So it takes out that liquidity. It runs up, creates all-time highs, hopefully comes back down, creates that, that range. And if, let's just say, hypothetically, I don't know, it breaks and it closes under that daily market structure shift, or that daily higher low, it would create a daily market structure shift. Now this is a big deal because that tells us that on the daily, we are trying to break structure and we are trying to come down to the downside. Especially if these candles are aggressive like this, not saying this is what's going to happen, but I'm just saying if you see these candles being aggressive in the selling process, you're going to expect some kind of selling pressure after the market structure shift. Now, unfortunately, this candle can't just start selling off like this. That's not going to happen. What it needs is like a confirmation that sellers really want to sell. So what is it going to do in this model? Well, after the market structure shift here, as you can see here, what it's going to do is it can come lower. We'll allow it to come lower. But it's got to come back up at one point. So maybe there's a fair value gap. Oh, right here. Boom. Maybe it lines up right here. Maybe there's a wick. And the next thing you know, there's a wick. Maybe it comes back up a little bit. And it goes to what? The consequent encroachment. Whoops. Maybe the consequent encroachment above the equilibrium. Maybe it hits a fair value gap that creates a credit here. Let's just say it's somewhere around here. Who knows, right? We don't really care. Oops. Wrong color. Okay. And then what happens? We hit that fair value gap, or we hit the, if you really want to get specific here with our entry, you can draw the OT and you can enter off the consequent encroachment of the OT, whatever, you can line it up. And then what you really want to see on the daily now is this candle absolutely get shredded out again and continue down. That would be ideal, because in the process, we also create a weekly market structure shift. So let's move up to the weekly and look at this. As you can see, I just saw on the daily, we talked about the higher low. And what is this? This is also a higher low. See how this was the higher low at that time? But then there was a new swing low that was higher than this swing low. So this is the higher low. This is a new higher low on the weekly time frame. As you can see, on the daily, we already got our market structure shift. But on the weekly, look at this weekly candle. Nice and strong, nice and powerfully down. What does this create though? Look at this high. What happens? It's lower than this one, and this high is lower than that one. What does that create? A swing high. The all-time highs. What did it react off? Maybe the -3 standard deviation, or -3.5. I don't know. And then it takes out weekly market structure shift. You would like to see on the week, maybe that bullish week comes back into here. You know, who knows? And then it comes back down. Right? That would be ideal. That is what we're looking for. That's what the sell model is teaching us. And ultimately, that's what we want to see. But again, just a little disclaimer, that's what we hope to see. If that does not happen, guess what? That's not a very big deal. Okay, because we're hoping that price does something, that does not mean it's going to happen in our favor. There could be another news factor. There could be just a major factor in itself that we're not seeing that could be driving price somewhere else. We just have to wait. Right now, what I wouldn't want to do is do a buy model, okay? Because currently, yes, we are bullish, and just doing a bullish buy model, which just means that we're trying to catch a trend. And as you can see, the trend for me is almost over because of all these time highs, or all the all-time highs. The trend for me is dying. This, you would like to see a buy model around here or down here. That would be fine to catch this. But the moment we break all-time highs, that's where I end it, because that's where it gets risky, because that's, you don't know, no one knows if that's the end of the trend or the trend's going to go higher. So that's when everyone is like this close to selling or this close to buying. Who knows, right? So I don't want that happening. Take a look on the S&P 500. So as you can see, S&P 500 completely closed above the -3. As you saw in NQ, we were still reaching for that negative, or we closed above -3, but we are almost at -3.5. You can see -3.5 on standard deviation at SPX is almost getting hit, and -4 is just right around the corner. Possibly could see that happening. Who knows? Again, we see the exact same thing on the daily and the weekly. SPX, we have higher lows, again, weekly, higher lows. We could very easily, again, create that market structure shift. I said, same as NQ, want to see daily and weekly market structure shift. come to the downside. That's exactly what we're hoping. Let's go to DXY real quick. All right, so DXY is a little more tricky, and I don't personally love to do DXY, but this is where it kind of comes in clutch, and this is where you can kind of get the the overall picture. Now, DXY looks like there's a whole lot more candles, and DXY has not made any all-time highs or any all-time lows, I'll tell you that. But right now, DXY looks bearish. And the problem with that is if DXY is bearish, then NQ and the S&P 500 are bullish. Remember what we were hoping for? We were hoping to go down. So what we ultimately want to see at the end of the day, or at the end of the week, or mostly, would be DXY to go up, to be bullish. The only way I personally, and please let me know if you have other ideas here marked on your chart. The only way I can personally see this being bullish is after it takes out this relative or external liquidity and internal liquidity, or lows and lows, right? That's personally, I think, the only way we can start being bullish. And the bullish reaction off of this would mean that we can go bearish on NQ, right? Only problem is that it's already gone so far up that by the time we even get here, I mean, that's like Tuesday, March. That's in March, bro. That's 2 months away. That's 2 months. So I'm not willing to wait 2 months. 2 months. So that means in 2 months, we'd be on NQ, we'd be like way above all-time highs. That just seems absolutely nuts. So theoretically, if we're being smart here, that is most likely maybe going to happen, maybe not. But by looking at the order flow right now, you can see it. Even on the daily, there's a fair value gap here that gets created. It respects. No consequent encroachment, but it respects it. There's another daily fair value gap that gets created here. Right now, it's respecting it. I would like to see this being respected. The weekly looks strong, but it looks a bit weak. This doji means a lot. We had a strong repulsion off, and then doji kind of, unbiased, selling and buying at the same time, and then another buying candle. What I would like to see for this week is if price can come all the way up. This would mean that if price comes up on DXY all the way up here, above this weekly high, then that can, whoops, don't know why it's like this. Then that tells us that for NQ, we're going to be going down. Okay, and if the moment we create a swing low or a swing high on NQ and SPX, that can possibly tell me that we're starting to go down. Now, we can create a swing high, by the way, and break that high. Let me just show you. Oops. What the fuck? Let me show you, for example. See the swing high, for example? This was the all-time highs. Swing high here. What do? All-time highs, boom, 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 boom. We come down. We're not coming down a whole lot, right? The whole range of it, it's like down here. So it's not even hitting the discount. So it shouldn't even be buying, to be honest. Let's see, did it even hit the discount? I don't think so. Oh yeah, it did. It did. So it did come down to the discount. Okay, cool. It did come down to the discount, so it started buying again. But you can see that this swing high here, even though there's a market structure shift here, as you can see, it bought all of it back up and broke this high. So if this over here creates a swing high, it could easily come back up and break it again. So it's price is volatile right now, and that's why I don't want to trade it. I just want to see what DXY does. The main thing I want to see with DXY is that it lines up and it's in sync with NQ and the S&P 500. If it's completely out of sync, it's doing some random stuff, and DXY as NQ and SPX is just not listening or not even reacting to the price that DXY is showing, then that's concerning. So that's my weekly analysis. If you guys want to just see this in pictures, go ahead and join the Discord. I'll be posting these weekly updates, every day. We'll see what happens. I'll be posting there. And join the Discord for more info and to learn, and we'll probably do like a live study session, this week or next week. So yeah, join up. It's link in the description, and I hope to see you there. And I hope you have a good trading week. I'll see y'all on the flip side. Peace.